The latest EIA weekly petroleum status report, which was published on Thursday, indicated that crude inventories increased by 2 million barrels, 1 million barrels less than indicated by API crude oil stock change report, which showed a crude inventory build of roughly 3 million. Gasoline inventories decreased by 3 million barrels, while distillate fuel inventories declined by 1.7 million barrels. Imports increased by 0.5 million barrels per day and averaged 5.4 million barrels per day, playing a major role in the total increase of crude inventories. Meanwhile, the U.S. domestic oil production has started to recover from hurricane-related shutdowns. Oil production increased from 9.7 million barrels per day in the previous week to 10 million. Production is still below the pre-hurricane level of 10.8 million barrels per day. It should be noted that U.S. oil producers have significant experience with restarting production after hurricanes, so domestic oil production will soon come back closer to previous levels. In this light, oil demand growth is required to avoid an increase in inventory levels, which will be bearish for oil. Unfortunately for bulls, the latest data on gasoline demand is not inspiring. The EIA reported that U.S. gasoline demand declined from 8.79 million barrels per day to 8.39 million barrels per day in the week ending September 4, 2020. In the week ending August 21, 2020, gasoline demand was 9.16 million barrels per day, so it suffered a very significant decline in just several weeks. Some analysts believe that the previous decline in gasoline demand, from 9.16 million barrels per day to 8.79 million barrels per day, was caused by hurricanes and the related disruption, but the second significant decline in a row is very disturbing for the bulls. A year ago, gasoline demand stood at 9.81 million barrels per day, so current demand is lower by as much as 1.42 million barrels per day. At this point, oil is trying to stabilize after the major sell-off, so it may temporarily ignore the developments on the gasoline demand front as it recovers from an oversold condition. Longer term, the softness of gasoline demand may present a serious problem for the oil market. While the gasoline demand data is alarming, it remains to be seen whether oil will be able to get below the recent lows in the upcoming trading sessions, as oil did not have any material pullback since early June, and many traders have likely waited for an opportunity to scoop oil futures contracts at lower prices.